Hello and welcome. You're watching Your Trades on ET Now. I am Sneha. With me is Shreyansi Singh. This is a show where we're going to sum up the market action that we've seen today and bring on board our expert in a short while from now to understand what we can expect from tomorrow's market session. On that note, let's begin talking about the day that we've seen today. And well, we started at with a very weak footing, but nonetheless, we have managed to recover slightly from the day's lowest point. Remember, at one point we were sub the 22,000 mark. In fact, now we have closed around the 22,200 mark. 22,161 to be precise is where we have closed for the day. So at least it's been a little bit of a recovery from the day's lowest point, but nonetheless, it's been a 3.2% intraday cut coming in for Nifty and a 3% cut almost coming in for Sensex as well. Sensex lower by 2,200 points on an intraday basis. Nifty a 750 point cut almost is what we've seen on the Nifty. India VIX is one index to talk about today because look at the kind of jump we've seen on the India VIX coming today. 65.7% higher in just one day. 9 whole points higher is where the India VIX is. We're close to 22.8, so close to the 23 mark on the India VIX. And well, that's a big spike coming in on India VIX in today's trade. Nifty Bank 2 in tandem with a Nifty 50, 3.2% cut coming in and 1640 points lower for the index on an intraday basis. Advanced decline ratio, barely any stocks in the green compared to what's ended in the red today. From the Nifty 50 pack, you have HUL that's made a very miraculous recovery, and 0.2% in the green is where HUL has ended. So that's the only stock from the Nifty pack that's ended in the green. Trent being your biggest loser on the back of weak order for updates. Tata Steel, JSW Steel, Hindalco, so it was metals that were a big loser in today's trading session, followed by Shriram Finance, L&T, Tata Motors, Adani, and Tata Motors on the back of the news flow that JLR shipping to the US has been halted. You also had a negative brokerage note coming in on that stock. So lots has happened. Lots of Tata group of stocks were in focus. Case in point, TCS, Trent, Tata Chemical, Tata Communication. You had Tata Steel. Lots of Tata stocks in focus. And well, tariff fuel meltdown has not only hit equities, it's hit commodities as well. Like we said, the metal index was down along with crude and crypto. Oil has slipped below. India has hiked a 2% export duty as well on oil and petroleum. So all of that has happened in today's trading session. And Shansi, it feels like so much has happened in the 6 hours that the market was working today, given the backdrop of everything that's happened over the course of the weekend.
Yes. You know, when we started off the day, we were expecting some of this slide coming in. We did have a meltdown to look at when you take a look at US equities or if you take a look at oil. But the kind of levels that you've seen today, in terms of oil as well, of course, you do have that key drag coming in terms of the global demand worries. And those concerns have yet again resurfaced when it comes to oil as well. When you take a look at some other counters that were tumbling away in trade, you did have Tata Motors as well tumbling as the JLR. You do have that halt coming in terms of US exports. So that's something that we're looking at. Other than that, of course, you do have the Morgan Stanley note that is still maintaining an equal weight rating when it comes to Tata Motors. 853 is their target price. But then other than that, you of course had a whole host of counters that were taking it on the chin. When you take a look at Trent, that's the one definitely to look at in terms of the move coming in on the particular stock, because you have 15% downtick coming in on Trent on the back of growth moderating sharply in the fourth quarter. You do have Antique maintaining a buy, but they're still cutting the target price, and that is something that you're looking at as far as Trent is also concerned. Even when you take a look at some of the other counters, you do have Nykaa also crashing on the back of a weak fourth quarter update as well. And on the flip side, there's Delivery that is jumping on that e-commerce express acquisition for about 1,400 crore rupees. That is something that you should be looking at in terms of stocks as well. So lots of counters to take a look at, but a tinge of red across sectors and across a lot of host of counters is something that we're seeing coming in. With that, let's also take the conversation forward then with Ruchit Jain, who's the Vice President, Equity Technical Research, Wealth Management at Motilal Oswal Financial Services. Ruchit, hi there. I just wanted to quickly get your take coming in terms of the slide that we're seeing when it comes to the market. Do you see a bottom in sight? What are you making of this?
Yeah, hi, very good afternoon. Well, although we are trading around the crucial support zones of 21,700 to 21,900, recently also we saw the markets forming a bottom around the 22,000 mark. And if you look at some historical data of last year, that is 2024, then from the month of February to May 2024, markets have made multiple supports in this range of 21,700 to 21,900. But considering our markets are reacting more to the global news flows, it is too early to guess that this support range would become a bottom again. So I think traders should be on the edge and avoid any kind of bottom fishing for now. Let there be confirmation in terms of a high top, high bottom getting formed on the lower time frame chart. But we believe that 21,700 would be the very crucial level, which if broken, then doors would open to that election days low of election results day low of 21,300 to 80 kind of range. So we are watching that important level of 21,700. So that's the one level which should be on the focus.
Okay, so if that's the bottom that you're spotting, Ruchit, hi and welcome to the show. Also give us a sense of if you're seeing any pockets of value, if at all, amid a market like this. Are you seeing good buying opportunities somewhere? Is there a buy on dips recommendation coming in for a couple of counters, and if so, which are those?
Yeah, hi, very good afternoon. So I think very selective counters, if you are a trader, then you should look at. And one space or one that we are quite positive in such market is hospitals space, where we have seen that the price-wise corrections which were recently, though, have not seen any kind of volume-based selling coming in over there. So Apollo Hospitals within this space on the charts is looking quite positive, where high top, high bottom clearly is in structure. Today also we saw that in spite of such markets, such significant correction in the market, we have seen relatively lesser correction in the morning, and the stock has managed to recover well from its short-term supports itself. So I think Apollo Hospitals can be a contra buy over here in such volatile markets. One can go long with stop loss below 6,560 for potential target around 6,970.
Well, absolutely. Thanks, Ruchit, for that recommendation coming in. But thank you so much for joining us. It helps to make sense of what is happening with the market at this point, because a tinge of red is what you're seeing. And on that note, let's get you some key commentary then. As the world is in the midst of market turmoil, experts in fact believe that India could weather the storm better than most while tariff tensions rattle economies. Some sectors, the likes of oil and gas as well as healthcare, may emerge stronger. In fact, top voices weigh in on what lies ahead and how they're positioning their portfolios.
The damage to the Indian economy should be less. I'm not saying that will not happen at all. There will be damage if there is, trade barriers. But if we play our cards well, our damage could be less. In most countries, the risks are manageable. With China, I think it's a bit different, and now they've gone into a retaliatory mode, which worsens the situation. I'm not sure how that plays out, so I'll be very worried if I'm a Chinese investor.
We moved out of certain stocks which we knew were going to be impacted by the tariffs in the US. We're also looking at domestic focused companies. So healthcare, and that also within healthcare, basically hospitals is one sector that we are very comfortable with. I think in the immediate couple of quarters, I don't think they'll be impacted by what's happening globally. Coming to hospitality, again, hotels, we are fairly bullish on that. Again, I believe that the next couple of quarters, they should be fairly insulated from what's happening globally. In fact, domestic consumption per se, I think that's going to do fairly okay.
My guess is that if this crisis continues, then we still go back to the old playbook of easy liquidity, fiscal stimulus by the government, all linked to the global, all linked to the domestic segments, and that's what we are betting for. But we will stick to the domestic theme, both the investments theme, which I think should happen in any case over the long term, and the financials theme, which we believe that offers good value.
Okay, so that's the word coming in from market experts on what to make of the markets right now and how to position yourself better in a market like this. But another important observation, Kunal Bothra has noted something very interesting, that every time the Dow Jones has stayed below the standard deviation range of 3 for a few days, it was followed by major consolidation. But what happens next? Kunal joins us to explain just that. Kunal, take it away.
Let's first understand what is the 3 sigma Bollinger Band. It's basically an iteration in which 99.7% of the observation approximately fall below that range. So any exceptional or over exceptional kind of scenarios, they generally get extrapolated into this kind of a Bollinger Bands. Now interestingly, we've looked at the last 120 years of the history for Dow Jones, and when the Dow has actually fallen below this 3 sigma Bollinger Bands and what has happened post that in the short term as well as in the medium term. So for example, in 2015, we had a very similar scenario where the Dow Jones prices for 3 consecutive days of the sell-off, we fell below this black line, which you can see is the 3 sigma Bollinger Bands. And when that happened, that resulted into the index going into first a sideways consolidation, which means that the pace of sell-off looks to be at an extreme. It feels that we are in the eye of the storm. But post that, there is a first phase where the index subsides, goes into a consolidation for a few weeks, months, and then starts a gradual process of a very strong recovery, thereby surpassing the previous starting point of the corrective highs. This was in 1998 also, where we'd seen a similar observation, where for 2 or 3 consecutive days, Dow had fallen below those long-term standard deviation bands. Then comes to 1952, a similar kind of an observation where the Dow had fallen below the 3 sigma Bollinger Bands. That initially led into the index going into first a sideways range, and then a massive or a major recovery, which encompassed in 1952 for Dow. The only exception over here was in 1940, where the bounce was not as sharp or as severe. As you can see that the Dow first gave a signal of 3 sigma Bollinger Bands, then followed some bit of a further correction, but then what followed was more of a sideways range with a very tepid kind of a bounce. Over here, this is just like a 10% bounce as compared to more of a 20 to 25% bounce in the previous scenarios. And the last case over here was in 1920, where we had seen a similar kind of a juncture, where after that first round of a major sell-off, what followed was almost a 1 month of sideways range, followed by a rally up move. So which means at current juncture where we are on Friday's closing, we have given a close below the 3 sigma Bollinger Bands. If in case today we fall, say, by another 4 to 5% on the Dow Jones, that could be a second confirmation day that we could be hitting that major fulcrum point or a support point for the Dow, which could lead into the index going to a major consolidation and then potentially a big rally.
Kunal, thanks for joining us with that interesting correlation between the Dow Jones and how our market acts when something goes wrong with the Dow Jones. Thanks, Kunal, for joining us once again. But while we are talking about the market mayhem that we've seen this Monday, let's talk about Trent. That's a stock that was in free fall in today's trading session, the biggest Nifty loser, and the fall that we've seen on Trent is something that we haven't seen in the last 4 or so years. Almost a 15% cut coming in on Trent, and this is on the back of a weak Q4 update coming in, because growth has moderated sharply in the quarter gone by. The standalone revenue has come in at 4,334 crores compared to 3,381 crores, which is an uptick of roughly 28% on a year-on-year basis. Now, you have brokerages that have set their expectations slightly higher, case in point being Motilal Oswal. They were estimating a jump of 36%. This jump has come in only at 28%. And also what's even slightly more troublesome for Trent is in Q3, the revenue growth was at 36% too. So it's a big mismatch between expectation and reality, and also on a sequential basis, it's a drop coming in from 36% to 28% in their standalone revenue. Annualized revenue per store, if you see in Q4, came in at just 16.8 crore rupees, and it was very flat. This metric had grown by 8% in the previous quarter, so that's something that did not do well. Now, on the flip side, or prima facie, you would think that all of these net store additions that they have done, 136 store additions throughout formats, which is a 29% uptick on a year-on-year basis, would lend some color to the stock today. But you have to remember that the bulk of these store additions were back-ended, and these are not customer-facing stores. So if you talk about store additions for Westside, they opened 13 and closed 3 stores in Q4, bringing the total to 248, which is an uptick of 9% year-on-year. For Zudio, they opened 132 and closed 2 stores in Q4, bringing the total Zudio count to 765, which is an uptick of 40% on a year-on-year basis. On the basis of that, Motilal Oswal has maintained a buy rating with a target price of 6,800 rupees per share. But what brewed trouble for the stock today was Antiques note coming in on this stock, wherein they have maintained their buy, but they've cut the target price to 6,801 from 7,363 based on the FY27 SOTP valuation, and they've also cut EPS forecast by anywhere between 2 and 10% for FY25 to 27, and they also acknowledged that this 28% revenue jump is slightly under what they were estimating for Trent. So all in all, a poor set of Q4 updates coming in for Trent, and all eyes will be on the day their numbers actually come out.
Well, absolutely. All eyes are going to be on those numbers as well, but we can't really take our eyes off the tariff tremors that are already being felt by corporates. British car maker Jaguar Land Rover, in fact, said that it will pause US shipments for a month as it assesses the impact of Trump's tariffs, calling the US an important market for the firm's luxury brands. Now, remember that the US has implemented 25% tariffs on all car imports with the intention to place tariffs on some auto parts as well. We did have Tata Motors. That stock was tanking away in trade, a decline of almost 6% coming in as far as that particular counter is concerned. Srishti is standing by with key details when it comes to JLR.
Well, yes, Tata Motors is under tremendous pressure after the company has announced that post the Trump tariffs, they're going to be pausing the exports to the US markets, because definitely US is one of those important markets for Tata Motors JLR division, because they drive 30% of their revenue from the US markets. So that's a significant number. And since Tata Motors export all these products from the European markets, and now the tariffs are likely to impact the business significantly, the company has decided to not go ahead, at least in the temporary terms. If we talk about the brokerage reports, then Morgan Stanley today has come out with a note, where a cautious note coming in, and they are also saying that if tariff remains, then JLR could again go free cash flow negative, making it tough to value the business. Because do remember, for Tata Motors re-rating that we have seen in the past, JLR free cash flow was a significant number that improved significantly for Tata Motors and helped the stock price as well. But now Morgan Stanley is highlighting that if all these scenarios play in, there could be a slowdown in the India business, the weak JLR profile, that could take the stock closer to their bear case of 416 rupees. For now, they haven't made any changes. 853 is the target with an equal weight rating. But all these negative scenarios, if they play in the medium term, then definitely that will not be a good scenario shaping up for Tata Motors stock. And they're also highlighting that FY26 could be one such year when free cash flow number will be keenly watched out for. Well, along with that, Tata Motors has come out with their Q4 updates, wherein this time the wholesales data has gone ahead by 1.1% growth on a YOY basis, while the retail sales was down. But the key to note is that the concerns were not around the Q4 numbers, while the company has also said that they are right on track on their net debt target, as well as free cash flow is positive in Q4. But brokerages are raising concerns on how the free cash flow number will pan out, and that's a possibility that it could go in the negative territory coming FY26.
Okay, Srishti, thanks so much for taking us through that. Tata Motors, another stock that was ailing away in today's trading session. But while we are speaking of stocks that were in the spotlight today, let's bring on board my colleague Gaurav, who's standing by with a list of all the other stocks that were making the buzz in today's trading session. Gaurav, take it away.
Tremendous pressure is what we saw on the market, and at the same time only handful of stocks which were actually trading in green today. And first, let's talk about Godrej Consumers, because we saw a very good set of numbers from the company in Q4 updates. Company is saying that they are likely on track to achieve the focus area objectives, and at the same time they have also maintained their EBITDA margin guidelines. So definitely on the back of this, we saw this stock is actually trading in green today. Other than that, Nykaa also came up with good set of numbers. They said that the consolidated net revenue is likely to grow somewhere in mid-20s on a YOY basis, but on the other hand, because of the pressure, we saw some kind of pressure in the stock price as well. IndusInd Bank, on the other hand, we saw bad set of numbers from the company because advances declined almost by 5% on a sequential basis, while deposit growth remained flat on a sequential basis. As a result, we saw some pressure in this counter. Utkarsh Small Finance Bank was also one candidate where we saw some kind of pressure, and numbers were also one of the reasons, because loan book growth was only at 7.5%, although deposit growth was at 23%. But when we talk about loan book growth, the bank had estimated around 15 to 20% growth, but they have delivered around 7% growth only. Lastly, let's also focus on delivery, yet another counter which was actually up in trade today, and the reason being that board has approved to acquire around 99% stake in Ecom Express, and the total cost of acquisition is going to be around 1400 crore rupees. As a result, we saw some uptick in this counter. So definitely watching out on all these companies on the back of the news flow that we have received throughout the day.
Thanks, Gaurav, for joining us with that list of stocks. Let's elaborate a little bit more on what Godrej Consumer has done over the course of the day, because, amid a market that was entirely in the red at one point of the day, you still had some pockets of green today, and GCPL was one such stock. Godrej Consumer Products is in focus today, and it has ended with an uptick of 0.3%. And given the way we have fallen, that's very good stock move coming in today on the back of a strong set of quarter four updates coming in. Remember, in quarter three, in the middle of the quarter, they had come out with a cautionary note saying that we must expect a very poor set of quarter three numbers, and that entire story has flipped and changed over the course of one quarter coming in for GCPL. because the management is largely on track to achieve their underlying volume growth target in the standalone biz. They're also all set to maintain EBITDA margins despite cost pressures, and they are on path to sustain performance trajectory in the international biz as well. For standalone business, the UVG growth is expected to be in mid-single digits, revenue growth to be seen in high single digits. For home care, mid-teens UVG is what we can see. Underlying volume growth is what UVG stands for. For personal care, mid-single digit decline in UVG is something that we are seeing. That's something that could weigh on the numbers. But once again, that's on the back of price volume rebalancing due to input cost inflation, so not much to worry about on that front as well. And they're also saying that EBITDA margins will remain similar to Q3 levels despite high inflation. International business also expected to do very well. So all eyes are going to be on the numbers when they come out for GCPL. But on that note, we'll wrap it up on this edition of Your Trades. That's your lowdown on what today's market session has been like, and we'll see you tomorrow in the hopes of a better market trading session tomorrow. Thanks so much for watching.